Now in the case of airlines, in the case of telecom, in the case of insurance, everywhere privatization is promoted. That seems to be the policy of the government, which is not going to be helpful for the country at all. This bank mega merger is absolutely not needed. In fact, it is a retrograde step. It has to be given up. State Bank of India has become a junior partner of Jio Payment Bank.
The money with the public sector banks is safe for any depositor, but in the social medias we come across messages which claim that the money is not safe in the bank, so just keep the money whichever minimum is required in the bank and take out all the money. Such kind of rumors are being spread in the social media.
As you have rightly said, it is only a rumor. Actually, as far as the money in public sector banks, it is absolutely safe. People say that you have 8 lakh crores, 9 lakh crores NPAs, how they will manage. But the fact remains, the public sector banks have been consistently earning profit. The recent answer to the parliament by the Minister of State for Finance, Anurag Thakur, it clearly says the public sector banks in the last 2 consecutive years, they have earned more than 1,50,000 crores operating profit, gross profit. Whereas they have incurred a loss to the extent of 80,000 crores because of the huge provisions. The huge provisions are made, 90% of the provisions are necessitated because of the corporates, particularly large borrowers. The small borrowers, the SMEs or the education loan sector or the poor people, they constitute hardly 3-4% only. So on account of the large corporates, 90% of the provision is made, and that is only making the banks incur net loss to the extent of 80,000 crores in the last 2 years. But this time it is rated the banks at the end of 1920, they will earn to the extent of net profit to the extent of 23 to 37,000 crores. It is estimated, it is only estimated. In the third quarter ending, the net profit of the public sector banks remain 507 crores. The point here is, because of the government's policy only, these huge provisions are made. Therefore, it is the responsibility of the government of India to come to the rescue of the public sector banks, and they have been doing it by way of recapitalization. In fact, if the money is recovered through teethful loss, instead of resolution plan, through this National Company Law Tribunal, through this IBC code, instead of that, if they strictly recover, then there is no need for recapitalization of banks at all, and the money will automatically come from the defaulters. That is not taking place.
So generally we come across statements like the public sector banks are outdated, the new generation banks are more modernized, user friendly, customer friendly and all those such things. But of late we see a lot of banks involving in some kind of misappropriations, and a lot of things are also coming up. So what is your take on this? Why this thing is being projected as in favor of the private sector banks, and even the non-banking financial corporations are also getting into such kind of activities?
So now you take one NBFC, DHFL, Dewan Housing Finance Limited, 80,000 crores is its liability, out of which 42,000 crores is from the banks. Around 7,000 crores public money is there. And there is a perpetuated fraud from the top. The promoters themselves have opened 1 lakh fictitious accounts, and they have transferred the money. And that is why in the initial phase of finding, some 22,000 crores fraud has been detected by the Reserve Bank's appointed agency. So it is not the public sector, it is a private sector, and that too a big non-banking finance company. It is given license by the Reserve Bank of India. It is not properly supervised. You take the case of PMC, Punjab Maharashtra Cooperative Bank, where against the norms of Reserve Bank of India, for one single borrower, out of 7,000 or 8,000 crores of deposit loan, 6,500 crores loan has been given to a single borrower. That is totally against Reserve Bank norms. There also again 21,000 fictitious accounts have been opened.
That too with the help of the top management.
Top management only did it. Neither the central registrar nor the Reserve Bank has detected it at all. You take the case of Yes Bank. Now it is in doldrums. You take the case of ICICI Bank, where a serious fraud allegation has been made by the on the part of the chief, Madam Chanda Kocha.
She has to leave also.
She has not yet come out of that allegation at all. It is still there. So the public sector banks are painted a bad image by the people who are having some vested interest. Whereas that is not the reality. The reality is the private sector banks are crumbling one by one. And so far 26 private sector banks after 1969 have crumbled. And even new generation private banks which have been opened 1993, out of 10 banks, 5 banks are now no more. They have vanished from the scene. That is what we are seeing. That is the reality.
So what leads to these kind of crisis? The public sector banks, the government of India, which has a 100-day plan to disinvest its shares in the public sector undertakings, promoting a lot of corporates, and this is in a way impacting the banking sector also. So what do you think is the reason for all these policy crises surrounding the banking sector?
See, the government in fact is not realizing that public sector banks are their tools for implementation of government schemes. That they are totally forgetting. You take Prime Minister Jan Dhan Yojana, PMJDY, out of 36 crore accounts, 35 crore accounts have been opened by public sector banks and regional rural banks. The so-called banks which are now pampered by this government, they have hardly opened 1 crore. Put together, total. Then why the government is favoring private sector? We are unable to understand. You take the case of small finance banks. What is the rate of interest on loan? It ranges from 15 to 24%. Whereas the public sector loan interest ranges from 8.25 to maximum 12, 13, maximum. So the range is between 8 and 13. Whereas their range is 15 to 24, 25, 26, like that. Why Reserve Bank is not forcing the private banks to come to at par with the public sector banks? It's a moot question the public has to raise. Whenever the repo rate is reduced, repo rate means the lending rate to banks, the Reserve Bank is asking public sector banks to reduce the lending rate to the customers also, so that the end users are benefited. Whereas in the case of private banks, whether it is new generation private banks, whether it is a payment bank, whether it is a small finance bank, not the question of payment bank. Payment bank cannot lend. Small finance bank, they are not enforcing this at all. Therefore, they are very free to charge any rate of interest. And that is why the rate of interest on deposit is also high.
Okay.
Now, when the average rate of deposit for public sector banks ranges from 6 to 7, their deposit rate is 9%. Because the spread is more. They can lend at the rate of 15, 16%, 18%. Whereas the spread is very less in the case of public sector banks, because their maximum rate of interest on loan is 12, 13%. So now the government should ensure level playing field. Otherwise, if it is in favor of the private banks, people are at loss, because the private banks do not enjoy the sovereign guarantee. If tomorrow something happens to their deposits, only they will get maximum 5 lakhs. Beyond that, they will not be able to get. So the government should ensure a level playing field in the case of interest on loans as well as interest on deposits with regard to public sector as well as private sector banks. And with regard to cooperative banks, these number of failures, subsequently one more bank has failed in Bangalore, and one more bank has very recently failed in again Maharashtra, Panvel, with 512 crores, here 3000 crores. All these things are very clearly exposing that there is no proper mechanism of inspection, periodical inspection, both by the central registrar in the case of multi-state cooperative bank, state registrar in the case of state cooperative banks, the Reserve Bank of India, and independent auditors. Here in the case of PMC, it is revealed that independent auditors have been bribed, and this fraud has been going on for the past 10 years. Similarly, the fraud in Bangalore based bank and Panvel based bank also has been going on for 8-10 years. How such a long period a fraud can be perpetuated? A former MLA has been booked in the case of Maharashtra Cooperative Bank, very recent failure. So, taking these things all together, there is a total failure of the mechanism that has to be set right by the Reserve Bank and the government.
Sir, after 50 years of nationalization of banks, again the banking sector is going under some kind of a crisis. The government is also playing a part in it by promoting private sector banks and merging, instead of expanding the base of nationalized banks, they are merging few public sector banks into a single entity. So what policy change do you expect, and what makes this government to take this kind of action which affects the financial stability of the country as well as the general public of the country?
Madam Nirmala Sitharaman in the budget speech and post-budget speeches, she is claiming that this mega merger of banks is towards achieving 5 trillion economy. I really do not understand how merger of banks is going to help them to achieve that. It is also not elaborated by the finance minister or by the finance ministry sources. Whereas the merger of our past experience, it shows very clearly it has the banks have become bigger, they have become more towards pro-corporate. You can take the example of State Bank of India. After merger only, the service charges have steeply increased. And also State Bank of India has become a junior partner of Jio Payment Bank with 30% shareholding. Take the case of Bank of Baroda, Vijaya Bank, Dena Bank. Now some 1,500 branches are slated to be closed. See, people are telling in the digital era what is the need for a branch. But I tell you, for taking deposits also, branches may not be that much needed. Perhaps that argument also we can just try to consider. But take the case of credits, particularly rural credits. Still 47% of the rural population, according to Reserve Bank survey, are under the mercy of the landlords and the usurious money lenders. So when that is the scenario, there is a need for expansion of the public sector into the rural area. Rural penetration is required, and regional rural banks have to be promoted, cooperative banks have to be promoted, and they have to cater to the needs of the credit needs of the ordinary people. Then only the financial inclusion will be in the real sense. That only will increase their purchasing capacity. They will have some small money to and it will help them to build their living. That is how in the case of agriculture, in the case of milk revolution, in the case of blue revolution, the standard of living of the common people have increased. And now it is going in the reverse direction. Instead, now the mega merger, which is announced by the Reserve Bank of India, Government of India, which is going to come into effect from 1/4/2020, as has been again reiterated by them, despite a severe protest from the bank employees. We have gone on strike on October 22nd. Earlier also we have gone on strike on December 26, 2018. But they are not bothered about the feelings of the stakeholders. They are going ahead. If this is going to become a reality, again it will lead to closure of hundreds and thousands of branches, displacement, and people are not, the customers are also not helped. Even today, if you just ask after 1 year of merger of Bank of Baroda, Vijaya Bank, Dena Bank, their Bank of Baroda customers cannot freely transact in Dena Bank or Vijaya Bank. And that is vice versa. The merger is only in the namesake. Now they have changed the name board, but actual integration has not taken place. It has not helped the public also. And on the other hand, the pattern is bigger the bank, it is going more towards the pro-corporate. So this bank mega merger is absolutely not needed. In fact, it is a retrograde step. It has to be given up. And again, promoting private banks. A lot of private banks have now come. More than 22 private banks have come in this period. BJP 1 and 2, NDA 1 and 2. And these private banks, what are they serving? Whom are they serving? They must take a survey. It is not done. They are, in fact, again have become another usurious money lender. The small and ordinary people are targeted. They are given 20,000, 30,000, 50,000 by promoting, by giving them a doorstep. Some money is thrust on them, and they are charged a huge rate of interest of 24%. The MFIs which have been functioning in the past, now they have been converted into banks. microfinance institutions. So they are serving or working in the same pattern. Their target is only the small and ordinary people, and they are being again, their blood is sucked. And for that purpose, do you need a bank? That is our question. And this payment bank, what is that they are going to serve? It's a big question. So the government now should realize that the public sector banks are the real backbone for the financial development of the country, and they should promote the public sector banks. They should not, at the cost of public sector bank, they should not promote the private sector banks, and they should develop the public sector banks. For that, the whole policy has to be changed, but that is not the case. Now in the case of airlines, in the case of telecom, in the case of insurance, everywhere privatization is promoted. That seems to be the policy of the government, which is not going to be helpful for the country at all. It is the public should create a pressure on the government that public sector only can save them, and it has been proven record. So in these lines, if government starts thinking only, they can really go towards the betterment of the economy. Then only the purchasing capacity of the ordinary people will improve, and that will create further demand, and that will create further job opportunities, and which will have a cascading better effect. If that is not the case, things will not be in the interest of the people. So the government should seriously consider promoting public sector banks and protecting them.
Thank you, sir, for joining us.
Thank you.
That's all we have for today. Thank you for joining us.